to all of you. I'm delighted to be here today at Mint's India Investment Summit and offer some reflections on SEBI's roles and initiative in maintaining market integrity. SEBI, as you know, has been entrusted with three important mandates as the regulator for the securities market. The first, to protect investor interest. Second, to promote the development of the market. And third, to regulate the market. So the initiatives of SEBI to maintain market integrity play an important role in meeting each of the above mandates. Let me say, what do we mean by market integrity? Over the years, the Indian securities market has played a crucial role in channelizing savings into productive investments, thereby promoting capital formation and accelerating economic growth. Businesses can raise capital efficiently through equity and debt markets, thus reducing reliance on bank funding. Indeed, even the banks themselves raise substantial equity and debt resources from securities market. One of the fundamental principles for securities market regulation is to ensure market integrity at all times, which implies that the market functions safely, fairly, and transparently. Safety of assets and transparency of information are paramount for investors, big and small. Any lack of confidence will move them towards unregulated markets. Similarly, market intermediaries who handle these assets for the investors must have faith that they have equal access to the markets, price discovery will be fair, and market abuse will be curbed. So, what has been the role of SEBI and what initiatives have been taken of late and what we are going to do? One is in the area of one big area is that of regulations. SEBI's formulation of regulations are geared towards the orderly developments of the securities market. For example, we prescribe registration requirements and standards for intermediaries who wish to operate in the market, ensuring that only fit and proper persons are licensed to operate in the market. Broadly, the reforms initiated by SEBI are aimed at enhancing efficiency, transparency, and robustness of the market. Going forward, we will be looking to review regulations, weed out those which are outdated, and rationalize those which may be necessary. This will be consistent with our object of achieving optimum regulation and creating ease of doing business by reducing compliance burden and the cost of regulation. SEBI prescribes norms for issuers of securities to ensure that funds are raised without delay and deployed efficiently. Internally, SEBI is using technology, including artificial intelligence, to ensure that the fundraising documents are cleared as fast as possible without compromising on disclosures. Investor interest is secured at all times by having a disclosure-based regime in place. Recently, SEBI prescribed quantitative thresholds for determining materiality, as per which a listed entity is required to make disclosure of the events and information. The aim of having such materiality thresholds is to bring about information symmetry for investors. The market infrastructure institutions, namely the stock exchanges, the depositories, and the clearing corporations, act as the first level of regulators for issuers of securities as well as for intermediaries. The MIIs are entrusted with the responsibility of providing equal, unrestricted, transparent, and fair access to all market participants. In fact, they are the first line of defense to ensure investor protection and market integrity. In India, we have chosen a model that allows competition, public shareholding, and profits for MIIs, which fosters efficiency in operations, encourages innovation, and provides natural backups. Further, adequate safeguards have been put in place to ensure that commercial goals of MIIs do not compromise their primary role of serving public interest and to act as first-line regulator. This is essential to foster long-term confidence in the market's ecosystem and to ensure stability of our securities market. Towards this end, SEBI has ensured that MIIs are strengthened on the front of governance and technology. Let me illustrate with some examples. On the governance front, we have ensured that the governing board of the MIIs is equipped to ensure that public interest is not overshadowed by the operations of the MII. The public interest directors appointed by SEBI play this vital role. SEBI will continue to engage with the PIDs of MIIs collectively as well as individually to have a better understanding of the operations and risks within the MIIs. On the front of technology, we have taken initiatives to build redundancies and resilience in the IT infrastructure of MIIs. Faster restoration of critical systems in case of disaster is expected to significantly mitigate the loss to the investors. We have also upgraded our supervision of MIIs significantly over the past few years and intend to further invest in enhancing our systems, particularly in the area of technology. Going ahead, we have instituted independent external evaluation of the MIIs once every 3 years, which will supplement our own supervision. SEBI will continue to follow a robust and transparent consultative process when formulating any regulatory requirement, wherein all stakeholders are consulted at every stage. As a step towards demonstrating its strong commitment to stakeholder engagement and transparency, SEBI has institutionalized its practices into a regulation which lays down the procedure as to how regulations will be made and how amendments will be carried out. A provision of review of regulations has also been codified to ensure their relevance with changing market dynamics. How do we enforce regulations through supervision? SEBI has to enforce these regulations to deter misconduct on part of market participants. This enforcement is carried out through a judicious mix of off-site supervision and on-site and thematic inspections. As part of off-site supervision, SEBI has developed a robust in-house alert system based on periodic reporting done by the intermediaries. Automated alerts are generated on the data to detect non-compliance with regulatory requirements and appropriate action is taken. Off-site supervision enables SEBI to cover more intermediaries and is a move away from the earlier sample-based supervision. An additional benefit of such automated alerts is to reduce the gap in interpretation of applicable laws and regulations and provide complete clarity to intermediaries. This aids in reducing cost of compliance. Market intermediaries are also supervised through on-site and thematic inspections. Where applicable, these inspection visits are made along with teams from concerned MIs so as to reduce the compliance burden on intermediaries. While SEBI ensures that market participants are adequately supervised, egregious behavior of intermediaries with respect to client assets cannot be ruled out, but cannot be tolerated. SEBI has been regularly taking various initiatives towards protection of client assets, as asset safety is important for investors to have confidence in the markets. Another important aspect maintaining market integrity is to ensure that market participants are not only aware of their compliance requirements, but also know how to ensure compliance. Towards this end, Industry Standards Forum is a useful innovation through which practitioners in the market and industry associations come together to develop uniform compliance standards in consultation with SEBI. While SEBI will continue to enhance its supervision capabilities, it's desirable that market participants are also nudged towards voluntary compliance with regulations. Action on market misconduct. SEBI has embraced the use of latest technology and data analytics to detect market misconduct such as insider trading, front-running, price manipulation, and financial statement frauds. Trades in secondary market are under surveillance on a daily basis, and alert systems have been put in place to detect suspicious patterns of trading. Market intelligence in the form of investor complaints as well as posts on social media also form an important part of SEBI's surveillance mechanism. We are also regularly collaborating with other regulators and with law enforcement agencies for pooling of information in order to take more informed enforcement actions. SEBI's enforcement process has evolved over the years in line with changing market dynamic as well as with evolving jurisprudence in securities laws. A range of enforcement actions are available with SEBI, from warning to censure for technical procedural violations to debarment and disgorgement of illegal gains, cancellation of registration for serious violations. There are sufficient internal checks and balances to ensure that the right level of enforcement action is taken and that entities are given opportunities to take corrective steps for merely technical procedural violations. This ensures uniformity of action and does away with arbitrary enforcement actions on part of the regulator. SEBI is also empowered to pass interim ex parte directions in the interest of investors in certain cases. Such directions are passed to restrain entities from practices that are adversely impacting market integrity. SEBI has also taken steps to strengthen its investigation and inspection process by building capacity within internal teams and by relying on technology for obtaining data and analyzing the same. The improvement in strength of SEBI's investigation and enforcement process can be gauged from the fact that more entities are now filing for settlement rather than litigating the matter, and the settlement proportion has increased to 40%. We will further encourage this trend. The increasing proliferation and misleading content on stock markets on various social media platforms leads to a lot of gullible investors putting their savings into investments which do not meet their risk profile. SEBI has been monitoring social media platforms to identify such misleading content and has successfully worked with respective platforms to take down such content before the damage is widespread. Investor awareness and education. This is one pillar where a lot of emphasis still needs to be done. The markets are changing rapidly, and it has to be ensured that investors keep pace with this change. Towards this end, our role in building investor awareness and education is very crucial. We intend to work with the entire market ecosystem to launch a more comprehensive awareness program for investor awareness, including on the pernicious cyber frauds and risks. Resolution of investor grievances. SEBI has put in place a robust grievance redressal facilitation mechanism for investors. This mechanism, also known as SEBI Complaint Redressal System, which is called SCORES, has been recently revamped. The new SCORES has reduced the time taken to resolve grievances and also provides for a two-level review for effective redressal of grievances. Then, online dispute resolution, which is ODR system, utilizes processes such as mediation and arbitration. This has been put in place to resolve grievances. As on date, around 5,600 disputes have been resolved through ODR with a claim value of around 390 crore. Towards a new conflict of interest framework in SEBI. Well, trust and transparency are crucial not only for regulated entities but also for functioning of SEBI as well. As a step in this direction, the board has recently decided to constitute a high-level committee to undertake a comprehensive review of the provisions relating to conflict of interest for members and officials of the board and make recommendations for an appropriate framework for preventing, mitigating, and managing conflict of interest, including a recusal policy and disclosure requirements, which cover public disclosures. In conclusion, I would say that in a dynamic and complex security market, maintaining market integrity is a continuing challenge. SEBI has successfully teamed up with the MIIs and market intermediaries to build a robust market integrity. SEBI's initiatives in this regard span a wide range: regulations, technology, supervision, surveillance, enforcement, investor awareness, and resolution of investor grievances. Going forward, we need to constantly update and innovate in all these areas, keeping in mind optimum yet effective regulatory stance. This can only be achieved through commitment and collaboration across various teams comprising members drawn from external stakeholders and officers of SEBI. Towards this end, we will march ahead. Once again, I thank Min for giving me an opportunity to share my views on this important subject. Thank you all.
Thank you so much, Mr. Pandey. So I'm going to request you to please take your seat and invite Ravi Krishnan, Editor-in-Chief, Mint, to take this conversation forward.
Good morning. Good morning, everyone. So, Mr. Pandey, there are 2-3 threads in your speech which I would like to take forward in this fireside chat. One is on this whole regulation versus development of the market, because at times, you know, they seem to be, these two roles of SEBI, they seem to be in conflict with each other. So let me give you an example. We have seen a lot of action on the F&O front recently, and a whole lot of complex rules, technical, you know, rules and regulations have been introduced. So maybe instead of doing that, do you think, say, having a threshold for retail investors to invest in F&O, would that have been an easier rule to implement?
You're right, you know, any issue that we deal with has 2 points. Now, if you have a type 1 error or a type 2 error, are we, you know, if we have not really regulating, we may be building systemic risk, and therefore that systemic risk may also not only harm people, but also spill over to other sectors. And then we can also maybe making type 2 errors, sometimes trying to over-regulate, stifle innovation. So any regulator in any sector needs to balance these two sides. Now, where the balance lies is a question of judgment, and that also judgment comes from the way we are organized internally and externally. If we are very concentrated, if we are unaccountable, if we are, you know, in our own world, then the possibility of errors on both sides are much larger. If we are engaged in a more proactive way, we are data-driven, we are able to look at the nuances, we can both have a balanced perspective on both avoid type A and type 1 and type 2 errors. So therefore, I would say that a balanced approach will do a lot for development of the market in a more progressive, in a more consistent way, and unnecessary volatility which is arising from flip-flop will be actually more harmful for development. Now, coming to your specific question on F&O. Now, you know that F&O itself is a complex market. So when you are, you know, you're walking up the complexity chain, your regulations, although we would like to have very simple regulations, but we cannot have a sledgehammer approach or a very blunt approach. We need a surgeon's knife. We need to know exactly how, because otherwise, you know, the innovations will be lost. So just to say the small investors, I mean, we have taken steps in this regard, as you know, looking at F&O reports where we found that more than 90% of small investors were losing. So obviously, I think there was not only an awareness element, what we think is also a more systemic issue. And these systemic issues need to be then worked upon, working with the stakeholders again, working with experts. We prepared a discussion paper, which is out in the domain. We have received about 800 comments, and we are looking into it. But the question is that there is some systemic improvements which need to do. And we simply can't be saying that only increasing the threshold is only an answer. Because we have to actually, because F&O is a very important thing. It's an important thing for, hedging risks, for price discovery, a orderly development of a F&O market, which has linkages with the cash market, but which does not have spillover in terms of, systemic deficiencies. That I think we need to plug, and that has been our effort.
Sir, it's just been a month since you have taken over, but in all your public speeches and press conferences, there has been one recurring theme that has come out, which is of reviewing redundant regulations and optimizing, regulation. Can you elaborate a little bit more on which are the areas exactly that you are looking at?
Well, first of all, I would say that a lot of ease of doing business also has happened of the last few years. So, like if you recall, there were delisting regulations, which was overhauled. There was takeover regulations, which was there. And these regulations were then drafted by an external committee headed by Justice. And then, we had also important thing on case of master circular approach where redundant provisions were taken. There was consolidation on the debt side and also the debt securities as well as on the, other securities which are redeemable. There, we had brought in a consolidated thing as well. But there are several where we will need to work on. And while I was talking to the associations last few days, I've been talking to various associations, I have asked them, and actually they have also come out with certain things where going forward, what should be our agenda. And there are several things that can still be done in terms of rationalization, in terms of removing redundancy, in case of combining things, and sometimes, combining things on across regulations also. For example, your advertisement code might be different for different regulations, whether it can be made consistent if the objective is to achieve the same thing. So I have asked them to identify all these points and then discuss within the various fora that we have. We have a primary committee, secondary committee, we have committees for different groups. Then we have industry standards forum. I think these are the very good instrumentalities through which we can work on detailing which are the regulations which have become outdated, which can be changed. Objective needs to be effective regulation. We are not really saying that we should not be really, as I said, that I elaborated, how important market integrity is. But how do we really achieve it? Through an effective yet optimum regulation. Because we must recognize that there is always a cost of regulation. For example, we had earlier, tried to, for example, said that done a lot of work for this merchant bankers and debenture trustees and custodians regulations. And we were sort of initially indicating a certain kind of a hive-off for the unregulated activities of these entities. Possibly we want to have a review to see whether hiving off may not be necessary and we can have other instruments to achieve the same thing. Because what hiving off will do, it will also put an additional burden, creating more SPVs, more entities, and then if it increases the cost of business, ultimately that cost of business is also passed on to the clients. Eventually, the people who are investors, they will have to pay for it. Nobody is going to pay from their own pocket. The question is, are we reducing the cost of intermediation or are we increasing the cost of intermediation? So we must try and achieve, because we have to also unleash several things, and some of the innovations are very much possible once we start exploring with that approach.
In your speech, you had mentioned about cracking down on misleading information in social media. Well, influencers are one category, but sometimes even regulated entities make claims, which is very difficult for retail investors or the public to verify. And SEBI had created a performance validation committee to look into these claims about past performance. What is the status of that?
So regulations have been changed, and you have the concerned CRA will be the sort of the Parva agency for the performance validation, and the concerned exchange will be the data provider. And now that regulations have been altered, and the rest of the follow-up work is being done in order to further progress on the performance validation front.
When can we see a conclusion to this? When will we start getting regular information on this?
Well, I don't have the exact date for it because it is different entities, but certainly we are moving in that direction.
Okay. A related question to this is, the number of RAAs, that's very low, woefully low in India. I mean, less than 1,000 for a country of our size. And there have been a number of suggestions for reforms, such as allowing individual RAAs to charge advisory fees for giving a second opinion, allowing them to distribute funds to the client as long as client level segregation is maintained, etc. What is your view on that?
I think currently well, first of all, I think I admit that, there is number of RIAs are really very inadequate given the size of our country. So I think we have to look at this systemically, the issues of why in one sense, why the people are not coming forward to do, are there entry barriers are large enough, or are we facilitating? So that's one part of it. The second is also educating people whether are they prepared to pay for advice. Because I think to some extent, I think there's a lot of Indians like free ship, the free advice is, so sometimes, because ultimately these have to evolve as a paid businesses. We have provided some rationalization of RAA regulations, but I had a discussion with them lately. And I thought that, regulations still makes it tough for them to really, for example, we have said that they can't do the performance monitoring unless they come to the performance evaluation metrics, the validation route. Now they may have, 10 years, suppose they have a prior 10 years of experience, and they are prevented from just displaying it in any manner. So that is also a concern for them. Then how do I, how do I recognize that what work I have done, I'm just being put up to a new fellow as vis-a-vis the old one. So there are certain barriers even for the existing RIAs, which we can say. What happens is that we sometimes do have some egregious behavior. And because of that, I think we start really, if we react very, vehemently to those things, on the side of regulations, then sometimes we make regulations much tougher than what it ought to be. So this balancing is something which we need to achieve in every regulation, where we do not, as I said, that in order to say that avoid type 1 error, we start making type 2 errors.
Okay. We are running out of time, but a couple of more questions. One of the striking things in your speech was when you said commercial goals of market intermediaries should not be in conflict with their regulatory, quasi-regulatory role also. So, I mean, with that in the background, I believe National Stock Exchange has written to SEBI recently asking about the no objection certificate from the regulator for its listing. Now, NSE filed its DRHP in 2016, almost 9 years, and there have been a lot of issues. But have they been sorted out? What is the status now of, where is the regulator vis-a-vis NSE's listing?
I think NSE is a very, as you said, this systemically important institution. In terms of market trades also, in terms of turnover, it's overwhelming institution. Before it goes public, it will need to be cleared off from different angles, which we really see. And some issues have been identified. Frankly, I have not really applied my mind to it yet. But what I am aware of is that there have been some issues which have been pending. As you know, litigation, etc., is one part. To what extent that can be settled through settlement process, and then we can move forward. The other part could be relating to, some of the governance issues, technology issues that might be there, certain, as I said, comfort that we might be asking and they would need to provide, and some of the governance issues that they need to be settled. So I hope that, of course, there is also a clearing corporation issue paper. This is put out in November for public consultations, and comments have been received. So I think all these issues, possibly the NSC and SEBI, they are in discussion, in the sense of, I think some letters have gone and they have replied to that. We will have to then examine and sit and take it forward. So I think we should take it forward in the best interest of the market, not only its shareholders, but also the users of this very important institution.
Great. One final question from a retail investor point of view. These shares, unclaimed shares which are transferred to the IEPF, Investor Education and Protection Fund, many retail investors complain that they are stuck for years and they are unable to claim them later. Is SEBI doing something about that?
I think typically this IEPF is handled under the Ministry of Corporate Affairs, but we are definitely in touch with each other as to how we can have this process do better, faster, because certainly there is a lot of, delays, and sometimes, the people have been waiting and so on. A certain capacity building also needs to be done in the IEPF on an urgent basis. But I think Ministry of Corporate Affairs is looking into it.
Right. Thank you, Mr. Pandey, for sharing your thoughts with us.